Welcome to the New York Outlook. Today is Monday, the 13th of November 2023. I'll start with the daily chart on GBPUSD. So starting with the daily chart, as I said, as you can see over the last week, there's been four bearish candles. Friday was the first bullish candle, and today appears to be the next bullish candle. What this tells us is we're in a neutral position because we've only got one daily candle. Usually 3 candles or more suggest that the trend is not going to continue and we can expect a reversal. Moving on to the 4-hour, currently we've got confirmed for its swing bullish structure, validated by both the change of character as well as the bust. What we can then see what happened is we had a change of character in terms of order flow. Then we had a starting point validation, validating the order flow pullback phase, and then from there what you can see is price came into the pro trend extreme. I'm not really interested in trading any of this as it's efficiently mitigated, so this is the last order block I will be longing from. What we do have is the pullback phase validation, which came as a result of supply holding after the change of character. What we then see is that this is also your last point of supply for this pro trend extreme, because the pullback phase objective is to essentially bring you into this pro trend extreme. From here what we can see is, from a substructure perspective, we haven't had a candle body break, which makes this the change of character point, which could begin to validate a primary leg forming from this 4H pro trend extreme. I think that covers the 4H pretty well. I guess to summarize, the London's outlook essentially was to trade longs, and now coming into New York we can still play longs based on New York continuations. However, we have to be aware of this pullback order block that can support trading shorts. If we do trade longs, we have to be aware of what we're trading against, and once we interact with this level, then longs stop making sense until we build some internal range liquidity, and essentially form a triangle which allows us to trade against the 4HOB without trading against the 4HOB. As the situation develops, I'll show you what I mean, but that's the outlook for now. So coming into New York, we pretty much looking only for longs, and then we'll re-evaluate what happens once we reach this area. Moving on to the 15 or 5 minute, essentially the same analysis. What is happening with my charts? Okay, I'm just going to refresh this quickly, just give me a second. Perhaps while that is reloading, we can touch on news for today. As you can see, there's a Canadian bank holiday, which doesn't really impact our assessment of GBPUSD. Perhaps just to highlight, GBPUSD is my primary pair, and if there's no opportunities on GBPUSD, then I will consider looking at secondary pairs. These are my secondary pairs at the moment. I'm not too interested in trading USD JPY just because of the Bank of Japan's interventions. They tend to run like 100 pip moves in a matter of seconds, so I'm not too keen on trading USD JPY for the moment. Okay, cool. So the charts are back. This blue line would indicate the start of the day. As you can see, the low of the day came in pre-Asia session. During London, I wasn't able to capture any moves that fit my trading plan, and now we're currently in the lull, awaiting for the New York Open. What we can see is this primary leg that is formed as a result of the reaction to the 4H Pro Trend OB represented by this gray block. Essentially what we can see is that demand remains in control. We've got a pretty solid chain that has been forming all along, which is good but also not good at the same time, because eventually this chain is probably going to be used as internal range liquidity. Looking to the left, as you can see, there's a ton of internal range liquidity. This would be our last point of IRL. However, we could probably consider this a valid last point of internal range liquidity as well. This is all in support of continuing to long. However, once we get to this, I'm not interested in longs until we develop new IRL, because trading against the 4HOB is generally quite risky and I prefer not to do that. It's not in my trading plan. So what can we say coming into New York is, as you can probably see, we've got this nice demand chain. There is some liquidity in the leg here. If we inspect these candles, this high is 22544. Okay, so this is equal, so in my view there's no liquidity in the leg for this move, making this the liquidity in the leg. What we also have to be aware of is order flow shifts, but since there isn't really any evidence of a pullback prior to this candle body break, this would be our change of character and this would be the liquidity in the leg. I don't really see any reason to not consider longs. So on New York Open, if this isn't broken, I'd consider taking a long, something to the effect of maybe this, covering this low, and targeting this. In terms of daily range, I believe we have enough range, because I mean the range ends there. We can likely cash in a nice 5-hour trade depending on how things go, but I'm waiting for the New York Open to happen and then we'll reassess. But essentially, if you look at this, this can be our liquidity for this chain, because I mean we've got a nice pass here, there's no chocks. This would be our chock. Well, essentially what I mean by that is our first change of character prior to the beginning of supply beginning to take control. But at the moment I'm heavily biased taking longs. It's just depending on how far will price actually break this chain prior to the New York Open. What I do want to look into is this formation. So over here we have a chock, making this a failed supply, making this a supply demand flip level, which means it's quite strong as well and don't anticipate it to fail. And then from there we've got this chain, but like I said, we've got quite nice efficient mitigations happening here, which in essence suggests that given how corrective this is probably internal range liquidity for the move to continue down. What I would say on the 4-hour is, because this is a reactionary flip and usually these tend to get swapped, I'm not too concerned about trading into this large void range, so I'm still okay with taking long trades, but at the moment I'd just rather wait for the New York Open and then reevaluate accordingly, depending on, you know, is price actually breaking this POI, what our liquidity assessments, is supply potentially taking control. Because if you look at this, essentially what is happening is this is a chock and if price comes into the supply and then continues to make a break of structure, we essentially have supply in control, and that invalidates our idea until New York regains regains control. But we've also got to take into consideration this primary leg, and any new order flow shifts will have to be supported by some sort of primary leg. Some sort of primary leg OP within this primary leg. So yeah, I think that's the conclusion of the New York outlooks. I guess I'll chat to you again in the end of day roundup that I'll do tonight or early tomorrow, depending on how things go.